In this video, we're going to look at three different portfolio examples, things that you could potentially do. Don't know why dictionaries come up, but yeah, three things you could potentially do. Again, obviously, it's not financial advice, but I'm giving you three different risk levels, portfolios that we're going to have a little look at. Also, apologies if I look tired, just on a night shift, I'm knackered. So, in my opinion, construction of a portfolio begins with the planning stage. So, firstly, we should look at what we bring in each month and what goes out each month cash wise. So, budgeting is very important and can potentially limit the amount of stress that you put on yourself. But that being said, you'll always likely feel like you don't have enough. Now, if you go back through the channel, you'll see a video regarding that. You'll see a lot of mindset based videos around crypto too, and obviously lots of different coins and stuff that we talk about. But so once we have our budget and we know what we can allocate to the portfolio each week, month, or daily, I prefer monthly. I know some people prefer weekly. However you want to do that, that's absolutely fine. Daily for me is I don't like daily myself, but if that's the way you do it, that's the way you do it. That's fair enough. Then we need to focus on what our targets are. I think this is really important. Targets are absolutely key. Picture and write down exactly what your dream life looks like and work out the dollar value to achieve that goal. So, if you want a certain house, a certain car, a certain way of life, how much do you need to have in your bank to then maybe retire and not have to do your day job anymore? Things like that. Write down exactly what you want. It's a lot easier following a stringent list of what you actually want, because then it makes it easier when it comes to your profit taking strategies. If you've hit your profit taking strategy, to hold again for another 1x, 2x, for it to then go to zero, or capitulate and go back into bear market territory, is dangerous, and it's something that I would never do. I think that's a crazy way to do it. I think it's better to get your targets aligned, and you can go one further than that. I mean, some people, things like The Secret, manifestation, law of attraction, things like that, you can go one step further than that. You can take 10 minutes out of your day to sit there and actually visualize what you really, really want. And I know people think that's pseudoscience or whatever, but it does help maintain some kind of balance, right? So now we must decide what kind of investor we want to be. Are we safe? Are we mixed risk, which I think is the category that I fall into? Or are we degen, which is, it can work. It can work to fantastic results, but it can also, more often than not, lead to terrible results. But we'll see as we go through it, right? Exit strategy. This is vital for success, in my opinion. I prefer the layering out on the way up strategy. So I base this around having my minimum and maximum coin target price for each of the coins that I have in my portfolio. Work out what the minimum I think will go to and the maximum, and then take out. You can either do 20% layering out or 25% layering out. It depends how you want to do it. Again, there's no hard and fast rules. It's just designed to be how you want to do it. You've got to be able to make sure that you're happy and comfortable with your strategy. Understanding of cycles is going to be important, as we don't want to be the people who flood into the market in 2025 buying our bags for inflated prices, because that's what will happen. It's best that we've been accumulating our coins and taking our positions as low as possible over the past 2 years. Being early really helps with this, and obviously it does. The earlier you can buy, the lower the price it can be. You don't need as big a pump to the upside in order to get your bigger gains and your bigger X's. A couple of things I want to show you. I've shown you a few of these things before, but this is a Wall Street cheat sheet. So it's psychology of a market cycle. I think this is quite important. So we've gone through different phases of this. I think at the minute, and this is just my opinion, that we're probably in between disbelief and hope, because we're having that kind of bit more of a crash at the minute. I think the ETF news, it's looking likely that was already priced in, right? So between kind of disbelief, we're not quite at hope yet, I don't think. And then when we're coming to looking at the best ways to take profits, between thrill and euphoria will probably give you the best gains. Obviously, if you time the top, then you're a genius. I definitely won't be attempting to time the top, the same way as it's very unlikely that you'll time the bottom, but some people do get lucky. Then now there's some speculation of whether this is a legitimate document or not. It's alleged to have been from 1875, and it's alleged to be what the elites base how their money making cycles work. So in category A, which is years in which panics have occurred and will occur again, category B is years of good times, high prices, and the time to sell stocks and values of all kind. Category C is years of hard times, low prices, and a good time to buy stocks, corner lots, goods, etc. Obviously, you can add crypto into that, assets basically, and hold till the boom and reaches the years of good times ahead, then unload. Sure thing, save this card and watch it closely is what people are suggesting. You can feel free to screenshot this if you want. But where we are right now, so obviously in 2019, we know that there was a panic, right? But if we look down here, 2023, so that was obviously last year, and 2022 were the times to kind of accumulate. And 2024 up until the halving, maybe even past the halving, is still time for accumulation. But at 2026, according to this chart, years of good times, high prices, and the time to sell stocks and values of all kinds, I would think that in 2026, people are going to be like, wow, this is amazing. And that's the time to get out. But we're going to be getting out, obviously. In my opinion, I think the bull run ends between kind of the summer to the end of 2025. Different coins will pump at different times, but around about there. So this is quite an interesting chart. Its legitimacy is unknown. I'll say that. Then we've got this. I've showed you this before as well. So we're now kind of here. And again, you've seen it before in the past, how it goes up. So we're going through the pre-bull, first bull, bang in the second bull. Same with 2019, 2020, 2021, 23. So we're coming about here. Halving's probably about there. And then we'll see what happens with that. Time will tell, but normally around here, we'll start seeing some kind of pump to the upside. And then obviously we want to be getting out along these ways because we don't want to be holding our bags. Again, the rainbow chart, you've all seen this, and this shows you the halving events that have taken place. So at the minute, we're kind of in the buy and accumulate range. But for the last, good year, we've kind of been in basically a fire sale range, which, it would have been a fantastic time to continue to add to your bags. But there is still time, but it is running out. Obviously, we're getting a lot closer now to 2025 and a lot closer to the halving. So in terms of portfolios, now, again, these are not my portfolios. What I've done is I've structured 3 portfolios, one being extremely safe, one being kind of mixed risk, and one being completely degen. So what I think we'll do is we'll track these over the next 6 months. Well, what we'll do is we'll track it to the halving and we'll see how things pan out. We'll track it maybe a couple of months after and just see kind of how these perform in different ways. And I think it'd be a good idea to kind of keep checking back on this. But obviously, you've got to construct your portfolio how you wish. Do not follow these portfolios. Do not use these exactly, and don't go all in at all. These are just examples. So what I've done is I've allocated $10,000 to each of these portfolios. Now these are mock. These are not my portfolio. This isn't my portfolio. You should never reveal the amount that you've got invested in anything. Always keep that to yourselves. Do things in percentage terms. If you want to talk about it in the comments, if you want to talk about it anywhere, do it in percentage terms. Don't talk about the actual dollar amount. It just isn't. Keep yourself safe. So the real safe one that we're looking at is Bitcoin, Ethereum, Solana, and Quant. I'd consider them to be quite safe. So what we've done is we've put 4,000 of the imaginary dollars into Bitcoin, 2,000 to Ethereum, 2 into Solana, and 2 into Quant. Now you can structure that different if you want, but this is just for a guide, and we're going to keep an eye on this. So this is the safest possible portfolio. Will you get massive gains? No, because that's not what this safe way is. And there are different investors wanting different things from these portfolios. If you want to knock a zero off, this will be 1,001. If you want to add a zero, it depends how you want to do it. There's loads of different ways, but to work out what if you were structuring yours similarly. So this is this one. Since I started it, it's up 0.31%. The markets are terrible right now. And then I've gone for something called, I've put it as solid, but I think this is a medium risk. So it's 2,000 into Casper, 2,000 into HBAR, 2,000 into Quant, 1,000 into Trias. So Casper hasn't had a bull run before. There's going to be a lot of potential in this. I think it's relatively safe. I think there's a lot of people behind it. I think the community is really good. And then you've got HBAR, who has been through a bull run, but obviously massively backed by big institutions. Quant, again, massively backed by big institutions. Those have been through a bull run, as well as Trias. Trias, for me, is massive potential. That's going to be one that I do hold. Like I hold Casper, HBAR, Quant. I hold a lot of these tokens. Trias, for me, fantastic. 1,000 in that. $500 then in Hello, Inspect, Myria, Front Fans, Viot, and Rightstream. So they go down in varying degree of risk. So I've allocated more capital to the safer plays, but spread out a bit more of a medium risk to some of the high risk ones with smaller percentages. Now you can do this however you want. Again, these are just examples. Don't follow these coins exactly, but what I'm interested to see is how these perform over the next month. I mean, we'll recap this along the way in videos over the next few months, and we'll see how things pan out. And then we've got this one, which is the DGen, the YouTube DGen portfolio. So again, start with $10,000 in this regard, and I've gone with 1,000 into the Carrot Alaskan Gold Rush, which is a game that I really like the look of. Again, I don't hold that. You guys beat me to it and smashed it right high, so I couldn't get in at the time. Pepe, so we've got a meme in there. So we've got gaming, we've got a meme, we've got a gambling coin. We've got Rollbit in there, 1,000 allocated to that, 1,000 allocated to Chain GTP, so it's got a bit of an AI feel to it. Front Fans again, 1,000 into that. I'm fully bullish on Front Fans. Myria, another gaming one, same as Game Swift, 1,000 into both of those. Via AI, 1,000 into that. Right Stream Entertainment, or the decentralized entertainment, 1,000 into that. 1,000 to Myro, another meme coin. Now, I'm not big on meme coins, as you know, but this is another example of this is the most DGen one that I've come up with, and thought, well, this will give you a bit of a mix. It's still got decent asset classes, and it's still got different narratives that are going to pump during the bull run. But it'll be interesting to see how well these all perform. So it all depends on what people's levels are. I'm in the level of mixed risk. I don't like to go full DGen. I will add a few DGen plays over the course of time. What I'm also thinking about doing is with this is we'll look at DCA. So in the next, say, 4 to 6 months, so April being the halving, and then June being kind of 6 months from now, what we're going to do is, I think each month I'll allocate a spread into these. So if we say, for the purposes of this, $1,000 a month, I'll allocate $250 to each of those as we go along. And then with this one, I'll spread it differently. I'll spread it based on how we've got these percentages now. And same with this one, we'll just do $100 a month each month into all of these, and just see how that pans out. So we've got the DCA strategy. And then when things start getting nice, we'll see what we would do if we were to potentially take profits and work out how well these portfolios can do. Again, this one's down 30%. $30. This one at the minute is down $85, which is, for me, the solid one, which is, it's mad how these things can work, but it can change so fast. And then the safe one is up. So that's just kind of how I would do things. I would try and structure them with narrative-based, what we think the narrative is going to be in the bull run. I'd look at the AI, I'd look at gaming, I'd look at real-world assets if you want. There's loads of different ways you can do this. You have to be comfortable with how you build your portfolio. Try and limit the stress, but having an exit strategy is really key. But I think this will be interesting just to kind of have a little look at how these three portfolios perform, because I think that we're going to see some surprises along the way. I know that. So if you enjoyed this video, I know it's very brief. It's kind of a bit of an overview video, but I think it's important. It is getting to the point where we're starting to run out of time, but we still do have a bit of time. So if you've not been in crypto before, then obviously the time is running low. If you have been DCAing in over the past year, 18 months, maybe 2 years, then you're probably in a very good position. You're probably panicking a little bit because you're seeing red on all the charts, but you're probably in a very good position to achieve the goals that you want. I want you all to do the best you can possibly be. I want you to have whatever you want and whatever you dream about, because I think it's important to try and have these goals, get them set, and then achieve it ultimately. And that's the whole point really for this channel, because not only do I want to see everyone else do well, I want to document the journey that I'm on to see what I can achieve. I've got my goals, a lot of them. And then if I do achieve them, obviously the videos that we make will be, you'll see the results. And I think that's good. And again, not sponsored. So if you did like this video, please smash the like button. I really do appreciate it when you guys do that. We're getting very close to 3,500 subscribers now, trying to push to 4. And ultimately the goal I have is 10,000 subscribers, and hopefully we can get there as soon as possible. Wherever you are in the world, whatever you're doing, have an amazing day. Have an amazing evening. I'm off to do another night shift. I'm very tired. Take care. Goodbye.